Hello and welcome to this very special edition on Money Control. I'm in conversation with celebrated investment guru Jim Rogers and Mahalakshmi. Jim, thank you so much for your time today.
Oh,
And
ML, I'm delighted to be here.
thank you. The first question obviously is something that has kept all of us preoccupied in financial markets. Is the worst really behind us? Because at the start of the year, we really thought that the worst of the rate hike cycle was perhaps behind us when we actually landed on a tougher terrain with this banking crisis. So two things. One is, what is your sense of the banking crisis in the US itself? Are we going to come out of this unscathed without any serious disruption to financial markets and any big sell-off like we saw in 2008, for example? And second, what is your outlook on the rate cycle going forward?
Oh, ML, you should watch SteamYard. They have the answers. I don't know. I can tell you, historically, these things don't stop. Once they start, it builds up. If you go back to every previous financial crisis, they usually start with a small place or an out-of-the-way place, and then a few months later, we are having serious problems. So this is not over yet. We had a problem in 2008 because of too much debt in the world. ML, since 2008, the debt everywhere has skyrocketed. The debt is gigantic now. So the next time we have a problem, it's got to be very bad because the debt has gone up so very much.
So compared to the 2008 crisis, this is a much smaller problem to solve. But is it a deeper problem to solve?
Well, it's a much bigger problem to solve than 2008 because the debt is so much higher now everywhere in the world. Even China has a lot of debt now. China didn't have so much debt 25 years ago, but even China has a lot of debt now. So no, then this next problem has got to be a very big. We've always had problems every few years throughout history all over the world. We will have them again. And the next one has to be very bad because the debt is so high all over the world. I don't like saying it, but I have to deal with facts.
So if it's a problem for all over the world, where do we go? There is always, in one part of the problem, in one part of the world, if you have a problem, you go to the other part. In one financial market, you have a problem, you go to the other financial market. You can move between currencies and equities and commodities. But now it's about sovereign debt. Where do we go?
Well, part of the problem is, as you so correctly point out, is everywhere now has a lot of debt, sovereign debt, everywhere. As I said, even China has a lot of debt now. India has a lot of debt now. America is the largest debtor nation in the history of the world. Excuse me. So this is a serious problem. It's got to be a very bad problem when it hits all of us. We had some banks go bankrupt last week. Next time around, we're going to have more. If you remember 2008, it started in 2007 with some small banks, and the next thing you know, we had Lehman Brothers, and everybody knew there was a problem. That's the way these things always work. They start small somewhere, and a few months later, everybody knows there's a problem.
Are you suggesting 2023 is like 2007? Is that what you're suggesting?
Well, that may be a reasonably good analogy. I'm certainly suggesting that it's not over yet.
And so, what do you think will be where do we settle from here? Do you see a step up in the inflation levels for a long period of time? Are we in an era of high inflation rate for many years? The other question is, when we saw something like that in the 80s, we've in the last 20 years, we haven't seen rates go beyond 5.5%, and we are somewhere close now. but the last time it went, the highest was 22% in early 80s and so on. So are we looking at that kind of escalation? Would you rule it out?
You have a good memory, or you've done good research. Yes, interest rates were 20% on government bonds in the United States in 1980 because the situation was so bad. The situation is probably worse. The inflation situation is probably worse this time because for many reasons. Well, for one, the United States was a creditor nation in the 1970s. There was Soviet Union, there was Red China. Lots of things have changed since the 1970s, and they've only gotten worse. So the next time we have a problem, it has to be very, very, very bad, ML. Watch SteamYard, you'll see. SteamYard knows what's happening. I hope.
But readers are listening to you, so you have to elaborate.
But this, Emma, look around the world. Japan has staggering debt, and they keep adding the debt every day. One of the largest economies in the world. China adds a lot of debt, and Japan prints huge amounts of money. I mean, everybody is doing it now. The U.S. in the last year or two or three has said, okay, we must print money. We must do something to create the economy. And I mean, I don't like saying this, but I know that history shows that when you print a lot of money and you have a lot of debt, you have inflation and it gets serious. And until somebody does something about it, you pointed out, interest rates in the U.S. were over 20% last time around. Well, ML, we're far from 20% now, far from 20%.
So that's what I'm asking. Is that a trajectory you think we are headed to?
I will tell you that interest rates are going to go very high before this is over. Not in this month, not in March 2023, but before this is over. And if you go back and look at the way these things work in the past, they start small and they start slow and they build up over several months into a very big problem. And then suddenly it's on the evening news and everybody knows there's a problem. We're not to that stage yet.
Sure. So what is your prognosis for this year, Jim? Because one question is on the, Powell keeps talking about this path to soft landing, that there is a path to avoid a recession. Do you think that is possible at all? And second question, okay, you can answer that, then I'll ask you the next question.
Well, central bankers and politicians are always talking about soft landings. I've never seen one yet. I've heard lots of talk about soft landings for decades, but they've never actually happened. Normally, markets, the way markets work is they go up, they have a correction, they go up, they have a correction. And that's what's happening now with inflation. We had a lot of inflation, but then central banks started raising interest rates, et cetera. So oil and grain and a few things came down in price, as markets always do. So people are starting to think, well, maybe things are okay, as they always think. And then, down the road, inflation will get worse again. This is not over yet. It never has been over after a few interest rate rises.
Sure. And you've always been a proponent of commodities, Jim. First of all, are you bullish on them?
I've not always been keen on commodities. Yes, commodities have had big bull markets at times in the last the last 200 years, 300 years, 500 years. We're probably now in another bull market period for commodities. I own some commodities, but I'm not terribly bullish right now. I think they're in a correction period, but if they continue to correct, I hope I'm smart enough to buy more silver before this is over. I hope I'm smart enough to buy more agriculture before this is over. No, they keep printing a lot of money. Look at the Japanese. The Japanese print. The head of the Bank of Japan goes to work every day and just print. And he says he will print unlimited. That's his word, unlimited amounts of money. ML, unlimited amount of money printing will lead to more inflation. Always has.
So, with respect to commodities, I mean, on balance, where do you see commodities by the end of the year? On one hand, on the demand side, you have this very distinct prospect of a US recession. On the other hand, there are, here now, not there tomorrow kind of signals from China. So, on balance, do you think demand will be better? What does that mean for commodities in the near to medium term?
Well, yes, demand will certainly be better, but supply is part of the equation always, as you remember. And because of the virus, because of the plague, because of the infections around the world, demand is not as strong. I mean, supply is not as strong as it could be, and we will have more supply problems later this year and next. And demand is certainly changing. I mean, apparently, ML, we're going to have electric cars. Well, electric cars use several times as much lead and copper and zinc and lithium as petrol cars do. I mean, it's a fact. If you have an electric car, it's going to use a lot more lead. It's going to use a lot more copper than a petrol car. So demand will be going up too.
And do you see supply side easing up at all over the next 1 year? The other thing is also, we're not really talking about the Russia-Ukraine situation at all. Could that erupt as a risk as well going forward into this year?
Well, once the economy starts slowing down, demand for everything will slow down. But as I said, there are changes taking place in the world, such as electric cars. So even if people have fewer cars, each car will have more lead, will have more copper, because there will be electric cars. And producing electricity takes a lot more energy as well. So no, we can have demand go up just because there are changes taking place in the world, even though overall demand is slowing down. And overall demand eventually will slow down. We haven't had a recession in the US for over 13 years. That's the longest in American history. So yes, we're going to have more recessions. And yes, they will cause demand problems. But in the meantime, we can also have supply problems. Remember, commodity prices are supply and demand. Inflation is supply and demand. So we can have more supply problems than we will.
Sure. And so I asked you again, I'm asking you this question again about hiding place. Is there a hiding place at all? Because like you said, you'd like to, before the end of this, you would like to buy more precious metals, silver and gold. But there is also this theory that financialization of these commodities, especially precious metals, itself makes them vulnerable to any kind of financial instability or whatever. They are not immune to whatever happens in the financial world. Would you agree to that? And therefore, can they be good hiding places at all?
That's very good insight. Very good. If you go back to previous big bull markets, bear markets, when things collapse in price, even silver and gold collapse for a while. Then, of course, silver and gold turn around, and they're usually one of the first things to go up again, and that will happen again. I own silver and gold. I am not buying silver and gold now because I expect there to be another opportunity. There may not be, but if there's another opportunity with silver and gold prices going down, I hope I'm smart enough to buy more. But ML, you're a steamyard. You're in India. Indians know more about silver and gold than anybody in the world. Everything I learned about silver and gold, I learned from the Indians.
Indians definitely buy a lot of silver and gold. I'm not sure we're always very well informed about the trends in the gold and silver. It's just, I think, blind faith in the fact that, it's sort of been a good store of value for a long period, so you can continue with the tradition. I guess that's the bigger mindset.
Well, Silver and gold has been a silver value for decades for the Indians. You invented
Yes.
silver and gold.
Sure. So, Jim, what is your outlook on India? I mean, India stood out as an island of excellence, and in equity markets, it was pretty much on top last year and the year before. Post-pandemic performance has been great, and these 2 3 years, obviously, China has been really on the back foot. There was hardly any growth. Therefore, that was also one of the reasons India got a lot of flows. The markets performed well. Going forward, how do you see this pan out, especially in the wake of China reopening?
Well, India has certainly been a very good market for the last, as you point out, for the recent past. And that I suspect India will be better than most just because your bank spends a lot of money there. But and India, I mean, sorry, China is down a lot because of the virus, and China completely closed down. Of the two, I guess I'd rather buy it. I'd rather buy China than India right now, just because China is down more. But I'm not rushing out to buy anything right now, ML. I expect more serious problems to come, and I hope I'm smart enough to buy if things go down, whether it's India or China or wherever it is, Japan. The Japanese stock market is down a fair amount from its historic highs. So I hope I buy more of all three.
Okay. So, what does your portfolio constitute right now?
Well, I own some India. I'm sorry. I do not own India. Sorry, I mistake. I own some China. I own some Japan. I hope to buy more of both. I own some commodities, energy, agriculture, gold, silver. I hope I'm smart enough to buy more of all of those things because that seems to be where the opportunities are. I don't particularly want to buy in the U.S. The U.S. made all-time highs. It's near its all-time high, and the debt builds up higher and higher there. I would suspect that the U.S. will be a much worse market, the next bear market that comes, than some of the other markets that I've mentioned. And I hope I'm smart enough somewhere along the line to sell short. I will probably sell short in the U.S. because that's where the excesses seem to be more than anywhere else.
Jim, I hear you saying two things. On one hand, you're saying that the worst is really not over, and we are sitting on a much bigger debt problem than ever in history. And the other thing you're saying is that you have bought all these markets like China, Japan, and your other favored markets. What does this mean? Are you just betting on non-US markets because you expect that whenever this fall really happens, other markets will be relatively better off, or will they come out unscathed? What is the bet? Because if you're bearish on all markets, you should just not be any financial assets at all and probably
Oh,
be sitting on cash.
well, good job. Good, well done. Good. Maybe I should sell everything, but no, in my investing career, I've always owned something. Maybe I own less than in previous years, or I can start selling short. I, throughout my career, I've always owned something, even if it's just gold and silver, even if it's just wheat and rice. I own something. So no, I don't want to never own anything because first of all, I'm not that smart. I can make a mistake. So I always like to own something, and I always like to sell something short. I am not selling short at the moment. I am waiting. I hope that I will hedge myself more by selling short, probably stocks in the US when the right time comes.
All right. So no cash for you. You're not sitting on cash.
Oh no, I have cash. I have a lot of US dollars. Yes, yes, just because of circumstances. Because as I sold things, most of the time I just kept the money, and I kept it in US dollars. I kept US dollars because when we have turmoil in the world, people look for a safe haven, and many people think for historic reasons that the US dollar is a safe haven. It's not. It's not. The U.S. is the largest debtor nation in the history of the world. But
Right.
people think the U.S. dollar is, for historic reasons, they think the U.S. dollar is safe. So I own a lot of U.S. dollars. My plan is that when the turmoil comes and the U.S. dollar goes up a lot and the U.S. dollar will get overpriced, I hope I'm smart enough to sell my U.S. dollars into the turmoil, into the bubble.
Sure. So, Jim, on a daily basis, are there some parameters or data points that you look at regularly, and where are you watching to see what are the immediate risks that could come and destabilize markets?
Well, that's an extremely good question. And the answer is I try to watch everything, but I don't have any specific things. I mean, I more or less know the price of gold, the price of silver, the price of the Indian market. I more or less know these things because those are markets, all markets interest me, and I try to stay abreast of what's going on in the world. That's how as an investor, I don't have any specific places that I only invest there or I only invest there. I'm open to investing in. I'm trying to invest in Uzbekistan right now. I haven't invested in Uzbekistan for many decades, but there seem to be good things happening in Uzbekistan. It's a very cheap, unknown market. So things like Uzbekistan, even if I see the world having serious problems, I hope I'm smart enough to invest more in Uzbekistan, even if I start selling short in the United States.
Fair enough. Jim, what is your outlook on crude? Because crude is one commodity that's strategically important to India, and a lot of India's macro depends on crude. What's your take?
Well, I own some crude. I haven't been buying it recently. I mean, a long time. In fact, I hope that I'm smart enough. I told you inflation will come back. I hope I'm smart enough to buy more oil, crude, as you put it, crude and perhaps natural gas. No, the price of crude and natural gas in this next bull market will go up a lot because this bull market for commodities, because that's the main commodity in the world. Yes, I know all the changes that are taking place. I told you about electric cars. I know all of that. But electric cars won't happen this week, not even this year. All of that takes a long time.
So you're saying once this recession, etc., has played out, and how long do you think that could be? I mean, could be the waiting period?
Wait, what period?
The waiting period for the next bull market.
Oh, yeah. ML, you should watch SteamYard. They know. I don't know. I'm not very good at market timing. I don't expect 2023 to be a bad year for markets. It's not going to be great. I would suspect that the real bull market, the real bear market, anyway, the best declining market, will actually be more in 2024, 2025.
Will stop falling in 2024. Is that what you're saying?
2024 will be a much worse year than we've seen in a long time.
Okay, that'll be 3 bad years in a row. I mean, if you're expecting 24 to be bad, 22, 23, and 24.
Well, 2022 wasn't a great year, but it wasn't a terribly bad year. I mean, if you look back over the past 50 years, 70 years, it wasn't great, but it wasn't a disaster. It wasn't like 1969 or something. I mean, it was not a good year for people to own shares, but it wasn't a disaster. There have been many, many, many much worse markets than 2022 and 2023 will be.
So before you scare people more, we'll close this discussion. Thank you so much for your insights, Jim.
I'm not trying to scare people. I'm saying to people, I'm not selling short. I'm not panicking yet. I just want people to start being worried because debt is building up everywhere, especially in the US and Japan and in Western countries, developed countries. And that has always led to serious problems. You, ML, should sell to scare people because it's going to be bad when it's bad. The next time it's going to be very, very bad. I said to you, we haven't had a serious bear market in the U.S., the largest economy in the world, since 2008. That's 15 years ago. So when
Sorry,
the next,
at the cost of repetition, when you say 2024 will be a terrible year, you are talking about the entire global markets or only the US markets?
well, if the US and Europe has a bad market, everybody has a bad market, including India.
Fair enough.
I mean, India sometimes stands out from other countries for many reasons, but if you start having bad markets in the US, Europe, Japan, everybody feels it. Maybe Uzbekistan will not feel it. That's because nobody's investing. Maybe North Korea will not feel it very bad. But most people, ML, will feel it very bad.
Sure. On that note, thank you so much, Jim. It was a pleasure talking to you.
It's a great pleasure, ML, talking to you. I hope we can do it again sometime. Thank you.
Absolutely. Thanks.
Bye. You were fun. Thank you.